Welcome to The Explainer. Today, we're cracking open the code of a stock that's been on one heck of a ride. And we're going to use the data to try and solve a puzzle that has a lot of traders talking.
So let's get right into it. We're diving into the mystery of ARBK. I mean, this stock has just been a total roller coaster lately. Our goal here is to use some technical analysis to really decipher its recent, pretty dramatic price swings and figure out what the data might be telling us is coming next.
And this timeline really tells the story, doesn't it? I mean, we're talking about extreme volatility here. A swing from a mere 15 cents all the way up to over 60 cents in just 3 months. You know, this isn't just a stock, it's a high-stakes drama of market uncertainty playing out in real time.
So, with all this excitement, you'd probably expect a clear buy signal, right? Well, the data is telling a totally different story. It's actually flashing a hold, and with low confidence, that basically means the system is shrugging its shoulders. We're in a state of suspense. Let's dig into why that is.
Okay, let's put on our detective hats and start with the bull case. We're going to look for every single piece of evidence, every clue that points to ARBK's price maybe continuing its upward climb.
So our first clue is a really powerful one. On-balance volume, or OBV. The easiest way to think of it is like a financial detective that's just tracking the flow of money. A rising OBV is kind of like a footprint, leading us to believe that a lot of buying is happening behind the scenes.
And look at this number. It's staggering. We're talking over 500 million. This isn't just a trickle of buying pressure, it's more like a tidal wave. It suggests that, beneath the surface of all these crazy price swings, there's a really powerful current of conviction from buyers. And the bullish case gets even stronger when we look at the other clues. It's not just one thing, it's a whole constellation of positive signals. You've got high volume on the up days, which tells us the buyers are really enthusiastic. The short-term averages are outpacing the long-term ones, kind of like a sprinter pulling away from a marathon runner. And then you've got these key momentum indicators, the MACD and the stochastic, and they're like two compasses both pointing north.
But, every good mystery has a twist. Just when we think we've got the case solved, we find a new set of clues that point in a completely different direction. So now, let's look at the bear case, the evidence that this rally might just be a house of cards.
The central theme of the bear case really revolves around this one idea: overbought. I want you to imagine a party that's just gotten a little too wild. The music's too loud, things are getting frantic, and you just have that feeling that it's about to end. Well, that's kind of what overbought means for a stock. It's gotten too hot, too fast, and a cool down seems pretty likely.
And what's really compelling here is that it's not just one alarm bell ringing, it's a whole chorus. The RSI, which measures the speed and change of price moves, is deep in the red zone. The CCI, which looks for trends, is also flashing a big warning. And even the Williams %R, another momentum indicator, is signaling that, hey, this party is getting way too crowded.
And the evidence just keeps piling up. Think of Bollinger Bands as the banks of a river that a stock price usually flows within. Well, right now, ARBK hasn't just jumped out of the river, it's practically flying. And we all know, what goes way up that fast, well, it often has to come back down. But this might be the biggest piece of evidence against the bulls, the long-term trend. When we zoom all the way out and look at the big picture, we see that the overall direction has actually been slightly downhill for a while. This recent spike, as dramatic as it is, kind of looks like a small hill in what's otherwise been a long valley. So, here we are. It's a classic whodunit. We have a compelling case for the bulls and an equally compelling case for the bears. The clues are contradictory, the evidence is split, and we're left with this puzzle. So how do we solve it?
This slide just perfectly captures the heart of the conflict, doesn't it? It's a high-stakes tug-of-war. In one corner, you've got the bulls, and they're fueled by all this short-term momentum and a flood of buying. And in the other corner, you have the bears, and they're pointing to signs of exhaustion and a long-term trend that is definitely not on their side. And this is exactly why even the most sophisticated algorithms are basically just throwing their hands up in the air. The data is a tangled mess of contradictions, making it pretty much impossible to make a high-confidence call one way or the other. It's a classic case of the data saying, maybe.
So all of this leads us to a really key concept, the consolidation phase. You can think of it as an intermission in a play, After a really dramatic first act, the actors take a break, the audience catches its breath, and everyone just kind of wonders what's going to happen next. That's where ARBK might be right now. Okay, so since the crystal ball is cloudy, we're not left with one, but 3 possible futures for ARBK. Let's explore each of these scenarios and see what path the stock might actually take from here.
Here are the 3 possible endings to our mystery. First, you've got the bullish ending, where our hero breaks through that resistance and continues its epic journey upwards. Then there's the bearish ending, where the stock gets tired and takes a much-needed rest, pulling back. And finally, the neutral ending, where it just decides to take a pause and move sideways for a bit.
And to know which story is actually unfolding, we need to watch these key battlegrounds. See that 42 cents? That's the fortress the bulls have to conquer to keep going. On the other side, that range around 38 cents, that's the trench the bears are defending. The outcome of this fight will likely determine the fate of ARBK.
All right, we've examined the evidence, we've considered the motives, and we've explored the possible outcomes. Now it's time for the final verdict. What is the one key takeaway from our whole investigation into the ARBK puzzle?
The final takeaway is really just this. ARBK is a battleground. It's a classic clash between the irresistible force of short-term optimism and the immovable object of long-term weakness and exhaustion.
So, what does this actually mean for anyone watching the stock? Well, it means that a pullback is pretty likely, so caution is your best friend right now. But it also means the bulls still have a lot of firepower, and this rally could absolutely have a second wind after it cools off a bit.
And let's not forget the daily dose of drama here. A 4-cent swing on a given day might not sound like much, but for a stock at this price, that's a nearly 10% move. This is definitely not a stock for the faint of heart.
And all of this brings us to the ultimate question, really. With the evidence so divided, is trading RBK right now a calculated risk, or is it simply a gambler's bet? The data has shown us the cards, but in the end, it's up to you to decide how to play your hand. Thanks for joining us on this explainer.